Hey guys, it's Adrian here, the Canadian in a t-shirt, and welcome to my members only video where I'll be showing you what Canadian stocks I'm buying in my TFSA in May 2023. Just like my April video, which I released last week, I'll be making this video public for about a week or so, and then I'll move it back to my members only section. I've been running this membership program for the past 3 years, and I want to keep these members only videos separate from the rest of my channel, and here's why. In these videos, I do a deep dive of my portfolio and the stocks and ETFs I'm buying at that point in time. But these videos do have a much shorter lifespan. After a couple of weeks or a month or two, no one's going to care what stocks I bought back in May of 2022. So for those of you who are interested, you can watch these videos with the black thumbnails in their own separate members only section. But for my main public channel, I want to keep it clean and I don't want to clutter it with these short-term videos. All of the videos on my main channel are still relevant and useful for years down the line, and that's my goal. But I decided to make this video public to give you guys a taste of what my membership program looks like and to give you a peek into my portfolio as a long-term investor and hopefully put your mind at ease during these uncertain times in the markets. I always like to start with a portfolio summary, and you can see that right now my TFSA portfolio on Questrade is down compared to last month. The Canadian market as a whole has been down, especially two key sectors that I'm invested in. The real estate sector, which is down because of rising interest rates, and the financial sector, mainly because of the turmoil happening with the US banks. Clicking on positions, you'll see that TD Bank is the largest holding in my Questrade TFSA. I'll talk about TD Bank later in the video, but they are heavily exposed in the US, which is why their share price has been dropping in the past several months. TD is my biggest position, so this is bringing down my portfolio overall. That being said, my portfolio is still in the green with capital gains of about $1,700. Even though the market is at a low point right now and a lot of stocks are down, I'm still profitable. And when the market eventually does recover, that's when I'll see some real gains. This is a very important lesson of investing that I talk about in this video, where I compare my portfolio, someone who's been investing for many years, compared to a beginner who's only been investing for a few months. Very similar portfolios, and we own the same stocks, but the new investor is in the red and the long-term investor is in the green. That's the power of time. So if you just started investing a few months ago and your portfolio is in the red, don't get discouraged. Ignore the short-term performance. Real wealth is built in the long term. In the short term, yes, my portfolio is down. I only have about $1,700 of capital gains. A month ago, in my last video, I had over $6,000 in gains. And now, 2 weeks later, while editing, I'm up $2,200. These short-term fluctuations do not matter. And this number here is just capital gains. On top of that, I'm also earning dividends. In my TFSA, I'm earning $5,250 every year in dividends. That's 100% tax-free passive income. I actually just received a bunch of dividends, and after my dividends and drips went through, I had about $170. Plus, I made an $800 deposit into my TFSA, so you'll see here on my available cash, I have $970 ready to buy stocks with right now. Before that, I want to update my spreadsheet with some dividend increases, starting with TELUS, ticker symbol T. TELUS was paying a dividend of 35 cents per share, but they just increased their dividend by 3.6%. Looking here on Questrade, we can see the new dividend of $0.3636 per share. Updating that on Excel, and boom, you can see that my drip ratio just jumped up, as did my annual dividends. I am now earning $176 a year in dividends from TELUS. A dividend raise of 3.6% is great, but even better, TELUS increases their dividend twice a year. If you want a breakdown of what all these columns mean on my Excel spreadsheet, watch my drips explain video here. And as always, I include a free link to download a template of this Excel dividend tracker in the description box below, so feel free to use it. Our next dividend increase is BMO, Bank of Montreal, and they just bumped up their dividend by about 3%. Now they're paying $1.47 per share. Update that on Excel. So now I'm earning $83 a year in dividends with BMO in my TFSA account. I also hold BMO in my non-registered account. I'll cover that in a later video. Now it's time to buy some stocks. I have $970 in cash available. So what stocks am I going to buy? In my last video, my goal was locking in that last strip with Manulife, and now all of these rows are in green. Those drips are locked in with a drip ratio of above 1. So every month or every quarter, I'm getting those extra shares tax-free. Today, I'm going to be buying a stock that I haven't bought directly in a while, in my TFSA at least, and that's TD, Toronto Dominion Bank. As I said before, TD stock has been dropping the past 2 months, but I look at this as an opportunity to buy this amazing stock at a great discount. Looking here at the end of February, early March, that's when the market turmoil started happening in the US with the collapse of Silicon Valley Bank, Signature Bank, etc. Then TD's acquisition of First Horizon Bank, that deal fell. So since then, we've seen a downward trend in the past 3 months. But it's still a fundamentally sound company. TD Bank has been around for almost 200 years, and they are one of my all-time favorite stocks. When you have this downward trend, a lot of people panic and freak out and sell their shares. I do the opposite. I look at this and I see an incredible opportunity to lock in a great discount. Let's talk about what happened. The troubles started in March with the failure of several US regional banks, namely Silicon Valley Bank, Signature Bank, and eventually First Republic Bank. I've talked about this in detail in this video here, but this rocked the financial world, especially in the US side. Out of the big 6 Canadian banks, TD has the largest presence in the US, which is why it's been hit harder than the other Canadian banks. I've talked about this in many of my past videos, but TD has been aggressively expanding into the United States, both through opening branches, but also through acquisitions. In fact, TD made a big push with a $13 billion acquisition of the US regional bank First Horizon. This was a $13 billion deal, but unfortunately, last month, the deal fell through. Given the state of turmoil with the US regional banks, I think it's good that the deal didn't go through. But naturally, this kind of news creates uncertainty and hurts the stock price. But just because the deal fell through doesn't mean that TD lost $13 billion. No, they still have that money. It's now just sitting as extra capital. And that's the silver lining here. Now TD has about $18 billion of excess capital that they can use to expand in other ways. Maybe in the future they'll try another acquisition, but for now they've announced that they'll be spending this $18 billion in organic growth by opening more branches in the States. They're going to open 150 new locations in the next few years. On top of that, they also want to expand their wealth business. Investment planning, mutual funds, that's a big moneymaker for them. Finally, TD is planning 30 million shares of stock buybacks. That's $2.5 billion worth of shares. Stock buybacks can mean different things, but to me, this is a good sign. When a company buys back shares, they are reducing the supply of available shares. That increases demand and drives up the share price for investors like myself. And second, this does instill a sense of confidence for investors. If a company is willing to buy back 30 million of its shares, then they see a bright future ahead. So that's why the stock price is down right now, but to me, this is a good thing and a great chance to buy it on sale. So not only will I be getting great capital gains once the stock eventually recovers, but I'm also locking in an inflated higher dividend yield of right now it's 4.56%. For TD Bank to be paying a dividend yield of 4.5%, we haven't seen these levels since the crash of 2020, so I definitely don't want to miss this opportunity. So click buy and sell. Confirming my available cash, I have $970, but I'm only going to be spending about $750. In my calculator, I enter $755, I take away $5 in commission fees since I'm buying a stock, and we divide by the current share price, 78.29, so I can afford to buy 9 shares. But since I have extra cash, I'll round it up to 10 shares. 10 shares at market price in my TFSA, click buy. It will cost me $782 plus $5 commission fees for a total of $787. Click send order. Boom, order was filled. I bought 10 shares. Looking at my cash balance, I have $183 left, so I'll use that to buy some ETFs. Just like last time, I'm going to be buying VDY. This is one of my favorite dividend ETFs. It's a Vanguard ETF that tracks 56 high-yield dividend stocks among the largest companies in Canada. They pay a great yield of 4.66% and they pay their dividends every month. This ETF is heavily focused on the financial sector, so it contains the big banks like TD, and the big banks are trading at a discount, so VDY is trading at a discount. with an inflated dividend yield right now. So let's buy some shares. Let's take my available cash, 183, divide by the current share price, 40.95, and I can afford to buy 4 shares. Confirm the details and send order. And boom, order was filled. I bought these 4 shares 10 seconds before the market closed. Looking at my cash balance, $19 left, not enough to buy anything with, so I'll stop there. Going to my positions tab and TD, you see I now own 149 shares. Let's update that on Excel. As soon as I hit enter, these numbers will bump up. Now TD is earning me $572 a year in dividends in my TFSA. Let's update the book value. It's now $11,374. That's how much money that I've put into the stock, either directly and through drips. I also bought VDY. Going to my positions, I now own 64 shares. The book value is $2,205, and VDY is paying me $124 a year. With today's purchase, I got a nice bump. I'm now receiving $5,300 a year in dividends. This is 100% tax-free passive income. And my TFSA book value, that's how much money I've put in, as well as dividends reinvested through drips, is about $97,000. I'm very close to reaching 100 grand in my TFSA. If my TFSA was maxed out, the maximum lifetime contribution limit of my TFSA in 2023 would be $88,000. I haven't even maxed out my TFSA yet, and my book value is already $97,000. That's the power of investing in your TFSA rather than saving. As my investments grow and I receive dividends and reinvest those dividends, that income is 100% tax-free, and it essentially increases my TFSA contribution room. I hope you found this video helpful, and I hope you enjoyed this free glimpse into my membership program. If you want to join and watch the rest of my members only videos where you'll see every single stock I buy in my TFSA and RRSP account, as well as a full portfolio reveal, then hit the join button down below to help support my channel. It will cost $5 a month or $1 a week, and I really do appreciate it. Running this YouTube channel is now my full-time job, and YouTube views and ad revenue can really fluctuate month to month. This membership program is by far the most reliable stream of income that I can count on. But don't feel pressure to join. It's your money, and if you'd rather invest that money every month, then please do that. If you don't need this detailed breakdown of my portfolio, the numbers and analytics, if you just want a snapshot of my portfolio and the stocks that I'm buying, you can do that for free by downloading the Blossom social app. I'll include my referral link down below. It's totally free to join, and the Blossom community just reached 25,000 users, and I'm very excited to see it grow. Thanks for watching, and I'll see you guys on the next episode of The Canadian in a T-shirt. Bye guys.